Well, 10 banks got approval to pay back $68 billion in TARP funds yesterday. Treasury Secretary Tim Geithner says it's a sign of financial repair, but there's still work to be done. Our next guest says the repayments will make banks weaker and could lead to more loan losses and bank failures. Mark Williams joins us now. He is currently a professor of finance at Boston University. He is writing a book on the fall of Lehman Brothers titled Uncontrolled Risk. That is out in January. Mark is a former examiner at the San Francisco and Boston Federal Reserve Banks. We also want to welcome back Bloomberg's Margaret Popper joining us for the interview. Professor, first of all, what is the #1 reason that you think banks could see more loan losses? I mean, is it unemployment?
Well, I think the #1 reason really centers around the uncertainty of defaults. You know, it's really almost a three-leg stool. We have defaults in credit cards that really have not peaked yet. We have defaults in commercial loans which haven't peaked. And most importantly, also in the residential mortgages. So those three areas are the uncertainty. And with uncertainty, you need additional capital.
Mark, it's Margaret Popper. I'm wondering whether you think that TARP has been paid back too soon here, and whether these companies should just have to be forced to hold on to this money.
I think we are jumping the gun here. In essence, I think majority of us understand why executives want to pay this back quickly. But from a regulatory standpoint, you know, these banks themselves are not out of the financial storm. TARP itself is a lifeboat. In a sense, this lifeboat, is it worth giving up now, or should we wait until we're out and we have a stronger recession? And I think that's really the debate that needs to happen. It's a little early. I'm not saying that J.P. Morgan shouldn't give their TARP back money back eventually, but at this point, it's too early in the game.
Well, Mark, TARP addresses the capital side, but what about actually writing down the assets? If we don't write them down, do we end up like Japan, sort of maundering on for decades?
Yes, and in Japan we call that the lost decade, and I think in particular we are delaying the inevitable, and that is that, you know, the assets have declined in value, and we do need to write off more, and you need capital base to support write-offs. So again, why are we allowing $68 billion to be given back to the Fed at this point and the Treasury? I wonder why.
Professor, do you think that loan losses or these repayments could be big enough to cause bank failures? If so, how many? Are we talking local banks? Are we talking regional banks?
Well, what we know so far, Deidre, in particular, is that the FDIC has come in and have closed almost 40 banks just this year alone. And that's a staggering number. We also know that if the economy continues in the tailspin and doesn't come out by 2010, that we'll have more banks that will declare bankruptcy. We know that banks can pull themselves out by increased earnings, but we also know as the recession increases, we know unemployment rates now are over 9%. If they hit 10%, less money will be available to pay credit cards. Big banks that have large portfolios of credit cards are going to see the hits. J.P. Morgan in particular is going to be hit. And again, this is a bank that's giving back $25 billion today. It's a bit early.
So are the bank or the TARP repayments better for the banks or for the taxpayers?
Yeah, definitely for the banks. TARP repayment is getting the banks out of what we call TARP politics. But yet the taxpayers themselves are still on the hook should these banks have to come back to the trough and actually ask for more money.
Mark, one question I have, though, in terms of the government involvement here. As a taxpayer, I'm sitting there saying, I'm giving the government my money, and they're using it like a money manager to invest in banks. I find that kind of risky. I'd rather see them get out when they can. What do you think?
Well, in essence, I think the government now needs to put on its investment hat and get out of the politics. And the investment hat would say, we own warrants. Right now, we know the warrants are worth approximately $5 billion to these various banks. It's not a good time to exercise warrants. The best time is when banks come back strong and we have a strong recession. That is, we're over it. That's when banks and warrants should be exercised.
So are you worried at all that paying back TARP money is going to create an unlevel playing field? I mean, this has been something that other people have cited. It's going to separate the strong from the weak. Is that necessarily a bad thing?
Yeah, the separation is clearly the thoroughbreds versus the donkey banks. And I think that's what's happened yesterday. That announcement has really clearly separated those banks that are viewed in a circle are going to survive and those banks that actually are still relatively weak. I think that distinction is really bad to have right now because confidence is what supports our banking system. And we're not actually instilling confidence by separating what we call the stronger versus the weaker banks.
Professor Williams, we thank you very much. Professor of Finance at Boston University.